It finally happened. The one move that crypto insiders and Wall Street giants have been waiting for. The floodgates have officially opened. You've seen the charts. You've seen the green candles that seem to defy gravity. Ethereum has been on an absolute tear, leaving analysts scrambling and investors euphoric. And while every headline is screaming about one thing, the Spot Ethereum ETF, I'm here to tell you that's not the full story. In fact, if you think this historic surge is just about an ETF, you're missing the bigger, more explosive picture. The ETF was the match, yes, but the rocket fuel? That's been quietly loaded into Ethereum for over a year. In this video, we're going to break down the three hidden forces working in the background that are truly powering this rally. We'll cover the institutional tidal wave that's just beginning, the revolutionary tech upgrades happening under the hood that nobody is talking about, and the multi-trillion-dollar use case that has the biggest money managers in the world repositioning their entire strategy. Stick around, because what you're about to hear will change the way you see Ethereum forever. First, let's talk about the big one, the catalyst, the Spot Ethereum ETFs. For years, getting a crypto ETF approved was like hitting a brick wall, but now it's a reality. BlackRock, Fidelity, ARK Invest, the biggest names in finance are now offering a direct, regulated, and incredibly simple way for massive pools of capital to get exposure to ETH. Think about what this really means. Before, if a major pension fund or a conservative family office wanted to invest in Ethereum, it was a logistical nightmare. They had to deal with digital wallets, private keys, and regulatory uncertainty. It was just too risky for them. The ETF completely removes that friction. It's now as easy for a hedge fund manager to buy Ethereum as it is for them to buy shares of Apple or Microsoft. This isn't just opening a door for new money, it's building a superhighway. We're talking about a potential tidal wave of capital that has been sitting on the sidelines, waiting for a safe and regulated way in. The approval wasn't just a news event, it was a stamp of legitimacy from the highest levels of global finance. It's a signal to the entire world that Ethereum is no longer a fringe tech experiment. It's a globally significant, investable asset class. But here's the secret. All that new money is pouring into an ecosystem that's more powerful and efficient than ever before. And that brings us to the second, and arguably more important, reason for this surge, the explosion of Layer 2 Second. For a long time, Ethereum's biggest weakness was its own popularity. So many people were using it that the network got congested and slow, and transaction fees, what we call gas fees, went through the roof. It was like a super popular highway with only one lane. That's where Layer 2 Second come in. Think of them as express lanes built on top of the main Ethereum highway. Networks like Arbitrum, Optimism, and zk-Sync are handling millions of transactions for a fraction of the cost, while still relying on Ethereum's core security. This is not a small-time improvement. It's a fundamental game changer. It means developers can now build complex applications, games, and social media platforms on the blockchain that can support millions of users without crippling fees. All that institutional money from the ETFs, it's arriving into an ecosystem that is now ready for mass adoption. The user experience is finally becoming fast, cheap, and seamless, which is the key to unlocking the next wave of growth. While the headlines focus on the price, the real story is the explosion of activity and innovation happening on these Layer 2 networks. Okay, so we have the institutional superhighway and the high-speed transaction lanes. But what about the engine itself? This brings us to the third and most forward-looking reason for Ethereum's rally, real-world asset tokenization. Now, if you only remember one thing from this video, make it this. Real-world assets, or RWAs, is the concept of taking tangible assets like real estate, stocks, bonds, even art, and creating a digital representation of them, a token, on the blockchain. Why is this such a big deal? Because it makes illiquid assets liquid. Imagine wanting to sell a small piece of a commercial skyscraper in New York. Traditionally, that's almost impossible. But with tokenization, you could sell a fraction of that building to anyone in the world instantly with minimal fees. This isn't some distant fantasy. This is happening right now. And the same institutions that push for the ETFs are leading the charge. BlackRock's CEO Larry Fink has said that the tokenization of every financial asset is the next generation for markets. This is their endgame. The ETF is just step one. Step 2 is to use the technology they are now invested in to tokenize trillions of dollars in real-world assets. And which blockchain is best positioned to be the foundational settlement layer for this multi-trillion-dollar shift? The one with the most security, the most developers, and now the most institutional buy-in, Ethereum. This isn't just about crypto anymore. This is about upgrading the entire global financial system. We are talking about a market that could be worth over $16 trillion. So when you put it all together, you see it's not just one thing. It's a perfect storm. First, you have the ETF, a regulated superhighway pouring unimaginable amounts of institutional capital into the ecosystem. Second, you have the Layer 2 scaling solutions, which have made the network incredibly fast and cheap, ready to handle 1 billion new users. And third, you have the holy grail of use cases, the tokenization of real-world assets, a multi-trillion-dollar opportunity that the world's biggest financial players are actively pursuing on the Ethereum network. The recent price surge isn't just hype. It's the market waking up to the fact that Ethereum has successfully navigated its biggest challenges and is now positioned at the center of the next evolution of finance. We're not just watching the price of a digital currency go up. We are witnessing, in real time, the construction of a new financial internet. The foundations have been laid and the institutions have arrived. If you got value from this breakdown, do me a favor and hit that like button and subscribe for more deep dives into what's really moving the markets. And let me know in the comments below, which of these forces do you think is the most powerful? The ETFs, the Layer 2 second, or the rise of RWAs? Stay curious, stay informed. I'll see you in the next one.